The Dow sold off today back to the T line. You can see there's kind of a trend channel. It didn't look like it made it to the top of the trend channel, but close enough to say either it's going to support on the T line and do a J-hook pattern and continue up, or if it comes down below the T line, we can assume that it's going back to the bottom of the trend channel. The graphics of candlesticks make it very easy to see when there's been a change of investor sentiment. Notice the top over here was a bearish left-right combo. There's another bearish left-right combo and a close below the T-line. Today's trading took the NASDAQ down to the 50-day moving average, just below it. It'll be important to see how they open tomorrow. If they do a bullish harami, it tells us the 50-day moving average is still acting as a support level. If they start trading it lower, now we watch to see where everybody else is watching, where there might be a support level. The T-line is a very simple trend indicator. Even with the market selling off, a number of our positions still traded positive, such as our recommendation on MNK that started off with a big Morningstar signal, bullish engulfing, J-hook pattern through the 200, and what's our criteria? We just stay long as it doesn't close below the T-line. BVN continued to trade positive. Our recommendation to buy it based upon this best friend signal, a doji gap up. This followed a big bullish engulfing signal. Stochastic's coming up. The important factor is it continued to trade positive even when the market was trading lower. VSI, same scenario, bullish engulfing. Then a bullish doji sandwich that broke through this level. We only have one criteria for holding on to this position. You stay long as it stays above the T-line. The inference right here is that even with the market selling off as it did today, out of a portfolio of maybe 10 positions, we still had 5 or 6 positions that continued to move positive just based upon the patterns that illustrated the bulls were still in control. Our recommendation on HCLP was based upon a kicker signal. Notice it opened here and closed here. The next day they opened it well above the previous day's open and went positive. A kicker signal is your strongest candlestick reversal signal. It basically tells you there's been a kick in the opposite direction of investor sentiment. Our recommendation to buy ESND on a positive open was based upon the same criteria. Opened here, closed here, gapped up, and went this direction on Friday. A kicker signal, not only your strongest signal, but notice that it broke out through this resistance level. Knowing what each candlestick signal illustrates allows investors to have their positions on at the appropriate time, and it doesn't really matter which direction the overall market is going. As the market starts rolling over, it's just as easy to find bearish positions. Notice our recommendation on DVAX was based upon a doji, a shooting star that failed right at the 50, a doji, a bearish left-right combo, and then continuing selling through this into this downtrend. And it also broke this support level. How long do we stay short on this? Until we see a sell signal and a close back up above the T-line. That very simple trading technique allows you to sleep very well at night, knowing the probabilities are in your favor. You're short as long as you're below the T-line. You stay long as you're above the T-line. That'll be it. We'll see you in the chat rooms.